Back a few months ago during Q3 earnings season, we saw Agnico Eagle come out on top in terms of delivering results. And well, they're looking to take that title again in Q4. But despite outstanding results, placing them among the best in the business, the market elected to sell off the name in after-hours trading following the release of the results. But we might know why. All right, folks, we're talking Agnico Eagle, we're talking Q4 earnings. Let's dive in. Okay, let's start off with the high level. Agnico Eagle in the fourth quarter posted net income of $509 million, or $1.02 per share, as compared to a loss of $374 million, or 75 cents per share, in the year-ago period, following a substantial write-down that occurred in 2023. Adjusted net income for the quarter came in at a record high of $632 million, or $1.26 per share, beating analyst estimates of $1.22 per share. Adjusted net income improved 119% on a year-over-year basis, from $289 million, or 58 cents per share. Adjusted EBITDA comparatively improved from $842 million in Q4 of 2023 to $1.33 billion in Q4 of 2024, while free cash flow jumped from $302 million to $570. The results, of course, were boosted by a large jump in the realized price of gold, something that all gold producers have experienced over the last year. The average realized price of gold climbed to $26.60 an ounce in the fourth quarter, up from $19.82 per ounce in the fourth quarter of 2023. For the full fiscal year, net income was actually down, falling from $1.94 billion, or $3.97 a share, to $1.9 billion, or $3.79 a share this year. The year-over-year decline, however, was a result of a $1.5 billion revaluation gain that Agnico took in the first quarter of 2023 in relation to their transaction with Yamana Gold in March 2023. Adjusted net income, meanwhile, nearly doubled in 2024, jumping from $1.1 billion, or $2.24 a share, to $2.1 billion, or $4.24 a share. Adjusted EBITDA also improved, moving from $3.24 billion to $4.69 billion on a year-over-year basis. Free cash flow improved by 126%, climbing from $947 million to $2.14 billion. On a full-year basis, Agnico saw its average realized gold price improve from $19.46 an ounce to $23.84 an ounce. In terms of the balance sheet, cash and cash equivalents stood at $926 million as of year-end, while 2024 saw Agnico repay $1.3 billion in debt over the course of the year, finishing 2024 with just $217 million in net debt as of December 31st. Agnico Eagle also repurchased 1.8 million common shares over the course of the year, for a total of $120 million, at an average price of $68.54 a share. The company finished the year by declaring a dividend of 40 cents per common share. All right, let's take a look at the production data here. Agnico in the fourth quarter produced 847,000 ounces of gold, which was actually a 6% decline versus the 903,000 ounces produced in the fourth quarter of 2023. The remarkable part here, however, is those ounces were produced at one of the lowest cost levels in the industry. Cash costs per ounce totaled just $923 per ounce in the fourth quarter of 2024 versus $888 an ounce a year earlier. All-in sustaining cost per ounce, meanwhile, came in at $1,316 per ounce versus $1,227 a year ago. While a fair bit higher than cash costs, it's still one of the lowest AISCs amid peers. For the full year, production totaled 3.5 million ounces in 2024, beating out the 3.4 million ounces produced in 2023, while setting a new production record for Agnico. Cash costs per ounce were even lower here than we saw in the fourth quarter, at just $903 an ounce versus $865 an ounce in 2023. For context, as Peter Schiff points out, with gold currently priced at $29.30 an ounce, it makes Agnico a literal cash cow. That's over $2,000 an ounce of pure margin. And while we're here, Agnico also updated their current reserves and resource estimates in line with the release of their Q4 results. Proven and probable reserves grew by 0.9% to 54.3 million ounces, which is even after pulling 3.5 million ounces out of the ground in 2024. The figure represents a new record high for the gold major. Well-measured and indicated resources grew 2.3% to 43 million ounces of gold. The most dramatic jump came in the form of inferred resources, which grew by 9.5% to 36.2 million ounces. In other words, Agnico has a lot more gold to mine. Okay, let's get into the outlook here. This is what may be partially attributable for Agnico's after-hours decline after releasing the results. Payable gold production is expected to remain stable at 3.3 to 3.5 million ounces for 2025 through to 2027. Well, that is positive news. Guidance for 2025 and 2026 is slightly lower than what was guided last year, as highlighted by Mark over at IKN. Prior forecasts had called for 3.35 to 3.55 million ounces in 2025 and 3.4 to 3.6 million ounces in 2026. New guidance is now just a flat 3.3 to 3.5 million ounces for the next 3 years, with numbers massaged across the different mines to keep things on the level. And costing is also slightly higher versus prior guidance by about 3 to 4%. But in the grand scheme of things, with the current gold price, it's really not a big deal. Cash costs are expected to be in a range of $915 to $965 an ounce, while AISC is expected to be between $1,250 to $1,300 per ounce. And on the expenditure side, capital expenditures are expected to be in the range of 1.75 to 1.95 billion, while capitalized exploration will be between 215 to 235 million. Finally, Agnico also provides guidance on a number of other cost centers as a sort of flex for how well they know their business, with estimates provided for exploration, depreciation, G&A expenses, and more. We'll have our editors throw it up on the screen here so you can take a peek if you're interested in that. Okay, so we're getting a bit long in the tooth here, so let's wrap it up. It was a strong quarter for Agnico, and despite the small after-hour sell-off on Thursday, they're in one of the strongest positions amongst majors in the sector. They've got plenty of reserves ready to be mined, a steady production profile for the next 3 years, and quite frankly, they look set to capitalize on the current gold environment. Yes, there are areas for improvement, such as whoever is handling their derivatives team, but they're one of the lowest cost producers, and well, investors have taken note. Now we just need the market to. All right, guys, we are in the thick of Q4 earnings season. Agnico is always one of our big ones. We believe in the gold space, and if you've been following me over on the Small Cap Steve channel, where I've been crushing general gold commentary, you'll know that I'm a big believer in where gold is heading. When we launched the deep dive, gold was under $1,500. We came out as big bulls on gold, and everything that was happening in the world would push the price of gold higher, and here we are. Now, Agnico Eagle is one of those names that I expect to drive the entire sector as we see money trickle down from the big producers all the way down to those little tiny junior explorers that you're probably not supposed to own. All right, everybody, thank you for watching. We appreciate all the engagement we get, all the shares we get, all the likes we get, and all the subscribers we get. We do this for you guys. We want to deliver for you. If there's names you want us to cover, let us know in the comment section. I appreciate every single one of you who took the time to watch this video. Thanks, everybody.